Right now, a digital asset based on a joke about flatulence holds a market value of over $100 million. Fartcoin is a meme coin built on the Solana blockchain. It gained traction in late 2024, riding the specific hype cycle of AI agent trading. However, this project has no founding team, no white paper, and no real-world use case. We are looking at a $117 million market cap against a total absence of utility. This quadrant chart plots the dilemma. Positioned in the extreme high-risk, zero-utility corner, is this a viable momentum trade or a trap for late capital? Two distinct groups are driving this market: the FOMO-driven beginner and the momentum speculator. Beginners often treat this as a lottery ticket, overlooking the mathematical risk in search of a quick payout. Speculators focus on the high liquidity and volatility, using the coin as a tool for short-term technical trades rather than a long-term hold. Entering this market means trading on raw sentiment alone, without any fundamental safety nets. The mechanics of the token start with its supply, exactly 1 billion coins. This bar shows that nearly all of those 1 billion coins are already circulating on the open market. Because the supply is fully circulating, there are no locked insider tokens waiting to be released and sold off. However, Fartcoin lacks a feature common in many other meme projects: a token burn mechanism. Burn mechanisms typically remove coins from circulation to create scarcity over time. Without a burn, the supply remains static. No internal mechanic exists to reduce the number of coins and drive up the price. This differs from deflationary tokens that use programmed scarcity to protect value for holders. Since there is no scarcity mechanic, any increase in value depends entirely on a constant influx of new buyers. This makes the token vulnerable. If community attention moves to a new trend, the primary driver of the price disappears. The tokenomics are transparent, but they ensure the valuation relies on sustained momentum rather than mathematical scarcity. The current trading data reflects this reliance on hype. The coin is trading at 11 cents. This chart shows the drop from the January 2025 high of $2.61 down to the current 11-cent level. That represents a 90% drawdown from the all-time high. Current market sentiment for the token is bearish. A 90% loss leaves many early investors trapped, often looking for any small rally as an opportunity to exit their positions. For short-term traders, the 20-cent line is the critical resistance level to watch. Breaking and holding above 20 cents would indicate a temporary shift in momentum. Failing to break that level risks further decline into total obscurity. Without utility, there is no fundamental floor to support the price if the sell-off continues. Buying at 11 cents is an attempt to catch a falling knife, leaving the buyer exposed to significant downside risk. Given these risks, how should you approach this asset? Long-term investors typically look for utility and portfolio safety. Putting capital here means accepting the possibility of a total loss. For anyone looking for a stable investment, the decision tree points to a clear conclusion: avoid the asset due to the lack of fundamentals. However, for momentum speculators, the high liquidity makes it an asset to watch for short-term price swings. You can find that liquidity on centralized exchanges like Coinbase and KuCoin. If you prefer a decentralized option on Solana, Jupiter is the primary choice for swaps. This is not financial advice. Always perform your own research before risking any capital in these markets. Like this video and subscribe for more coin breakdowns. Let us know in the comments if you think the hype is over or just beginning. Fartcoin is an example of pure internet speculation, a high-stakes casino game disguised as a financial asset. Trade accordingly.